Welcome back, everybody, to another Mark Day. My name is Axel. I will be your designated Inquirer for today. And today is 9/9 of 2020. Today was, well, it was very interesting. A lot of things were happening throughout the day. A lot of things that were a little confusing. And as Mr. Van Meter would say, the market only makes sense when bonds are rising, and bonds were not rising today, so the stock market did not make any sense in turn. But it kind of did a little bit, because it seems to act most sane when it's going down. It seems most predictable when it tends to be going down. So if we look at the daily here, okay, there was a reduction of volume. It ended up landing where I thought it would, which is around here. And if we take a look here, I'm gonna raise this up so you guys can see it. Okay, there. All right. Lower this down a little bit, and we take a look here. Okay, I'm gonna go ahead and I'm gonna draw a line. Here we've dropped down about 40%. Remember, last time we saw a decrease in about 72%, 70% around there, till we knew more or less that this was done and over with, right? It had to be a substantial reduction in volume. We knew before we knew it was over. Because the last time we had one of these where it kind of turned into a bear market, we did not necessarily see the bottom, or even what was remnantly the bottom, until we hit a reduction at about 72%. Just to confirm, let's go ahead and do it again. We're going to do it again. I'm going to reduce that to there. I'm going to go ahead and we're going to draw a line into about there. Okay. Yeah, to about there, 72%. That's just to keep it there. All right, I'm gonna keep it there. I'm gonna change the properties. I'm gonna show the label on hover, and I'm just gonna leave it there, okay? Because this is gonna be our barometer from now on, when we're like, what happened the last time this thing dropped to, for forever and a half? This is still a drop in 30%, right? This is still a meaningful drop, but not the worst drop possible, right? So if we look here, this is not the drop people were expecting from a depression. This is not a drop people were expecting from a major pandemic. It only went down 32%. 32% is nothing in the scope of like a major recession / depression, which, the economy doesn't look right. A lot of the economy has changed. A lot of change has been forced. There's a lot of people that are a lot of businesses that are going under because they just cannot function under the current environment, which is a pandemic. But also, considering how we're taking this as a country, it is going to be very difficult for us to be able to move forward and to be able to resuscitate a lot of the industry that used to exist before. Because we're probably going to be living with some form of this virus, I think. And even our early estimates of how effective the vaccine might be might not be enough compared to already existing flu vaccines and other vaccines that we trust, where it could effectively take us to herd immunity. Not within like the year that we're even thinking about. Like, we thought this was going to be over in 2 weeks. It has now been more than 6 months almost, and a year out next summer we're probably not even going to be done with it with this thing. I don't think, like, considering how slow we're moving to adopt even social changes, like responsible social changes that are probably required of us to make the economy, not for any selfish reasons, but for like the rest of the world, to get the rest of the world working and in a place where it can function. We're not doing any of that. All right, so let's take a look at the 5-minute here, okay, because some interesting things were going on. All right, so we have a close of the market here, and it took a little bit of a dip, and it's kind of been recovering. Okay. Yeah, because the dip was about here. Close of the market, 55 here. All right, this is about the close of the market. We are now up into positive territory for tomorrow. Okay, there's a lot of things that can happen between here and then, so it's not very important to look at what's going on after hours. It can give us some inclination, but you know, a lot can happen. But let's talk about a little bit about what happened today in terms of what these blue bars are over here. Okay, these blue bars is basically a given price in the volume of transactions that were executed under that price. Okay, the dark line right here is what is called the point of control. Now, depending on where you put your information, etc., whatnot, to display at you, sometimes the point of control will change, etc. But something that I've kind of noticed, I don't know if this is correct, and people, you guys can please tell me in the comments if I'm wrong, but sometimes it does seem as though that throughout creating these bars, etc., for a trader to have confidence that they can move further in one direction or another, that they feel more comfortable when they are essentially around the point of control. Because if we look at it from a statistical standpoint, what we see that's going on here is that the point of control is essentially the tippy top of what we would call the bell curve, right? So the point of control should be equivalent to essentially seeing a bell curve. In this instance, we have multiple tops of a bell, right? Of this bell curve. These yellow lines here represent the standard deviation of distribution of the volume as a function of price. Okay, so this is partially kind of what VWAP is in a way. It's kind of what it tries to measure. These are two standard deviations up and down from the current price. Well, it should be from the price distribution from where the month started. Okay, these are standard deviation up and down given the motion of price, and other equations and or algorithms that dictates the function of VWAP. I'm not sure myself, but that's from what it's called and how I think it should function. That's basically what it's telling me and how it's functioning. So something similar is kind of happening with this volume weighted distribution, price volume distribution, volume distribution by price. I don't know exactly how you want to call it, but that's what's happening. Okay, that these bars right here are basically giving you a standard deviation of the distribution of executed transactions. Okay, and this dark bar here is the point which most of the transactions occurred. It happens to be kind of like the mode, the thing that got executed the most. But it also happens to be the top of the bell, where so kind of you can almost guess that the standard distribution kind of hangs around. What's going on here though is that if the price tends to stick around here any longer, like overnight, etc., and then maybe into the open tomorrow, the point of control is going to shift. It's going to shift from up here to down here. And what I have noticed over time, sometimes, is that the point of control can shift and can alter the trading behavior of the market, in that sometimes it'll want to close during a given period of time, like in this case during a month period of time, around a point of control. Sometimes it doesn't always happen, especially considering whether or not there was a run-up, or in this case, whether we know somebody was messing with the market because they were, buying options ad infinitum to pump the market up and taking those profits and buying even more options and making this crazy machine of greedy profit. Anyway, apart from that, generally, you can see on a daily basis for a stock to if it's close to point of control, that it will sometimes end about the point of control. It doesn't always happen. It's just statistically that's kind of what happens. Okay, there's a price around, like certain events can happen throughout the day where it'll alter the price, and people are like, well, does it really worth this much? I don't really know. It's like I kind of feel like it's probably cheaper, and so there's a reversion to the mean, in this case to the most effective price point, where traders or people think the price is more evidently represented, right? A better price, a MSRP, a retail price, something that you can go to almost any market and you know that a bag of chips will cost $1.50, that a 2-liter bottle of soda will be like $1.25. Like, you think of a particular product, and in your head you already have a good image of what the price should be. Same thing kind of happens around at the point of control, that if people are basically at a loss and basically have no other information to go off of, they'll probably probabilistically coalesce around the point of control. Now, what people try and do, kind of like we see here, that early on in the month the point of control was where it started, and maybe it moves down a little bit and maybe moves up a little bit, but it'll shift with where people think the price will be. And in this case, there was a shift upward, a shift back down to where the price control was. So something happened to the market that shifted the price of the product, but the point of control was still down here. The price then reverted back to the mean to try and encompass what people thought was a more acceptable price for the same product. In this case, is the NASDAQ, and reverted back to this point of control. Then later on, either getting reaffirming information or something like it, went up to this other point where there was already a lot of volume, a lot of price action deposited, right? There was a lot of volume executed at this price point. So they reverted back, because it was positive, to this price point. At somewhere along the line, they probably got more reaffirming information to where they're like, oh man, could this thing be worth even more? Well, let's try it out. So through price discovery, they basically bid up the price of the product, and it got to a point where people were basically like, nah, this feels a little too expensive, I don't really want to buy here. So they don't. So it creeps back down to a level where people remember it being most executed. They have this thing that they want to sell. At what price are you going to sell it? The price that it most likely sells for, which in this case is around the point of control. So it comes back down and gets executed at this point of control, probably shifting. Here it probably shifted. Somewhere along here it probably shifted, and when the shift happened is probably when they felt more at liberty to explore above and in the direction of the shift of the point of control, is what I'm trying to say, right? And then later on there was, a motion to go back, but by the end of the month, maybe that information wasn't all that great, and so it made more sense to trade back to the point of control, which is what they did. To close basically within the standard deviation and really close to the point of control is probabilistically what you can expect to happen a lot of the time. A lot of the time is probably what's going to happen, okay? When you get to the end of a month or end of a period, you will probably see the stock market and around the point of control. There are some cases where that won't happen, but probabilistically it's something that can happen. Okay, there has to be some extenuating circumstance or something really pushing the market in one direction, and or new information that'll push it in a different direction apart from the point of control. And you can have multiple points of control, basically places where a lot of volume has accumulated. Okay, a lot of times previous points of control where it has shifted from and to can serve as future points of control also. That can also happen. So what we've got here, looking now to the future, is that we have this old point of control here, which is what we dropped to. And what might happen here in the next couple days is that we might try and coalesce around this point of control here, shift it, and then move further down, because we've now shifted the point of control lower, and it would be more comfortable to hang around this point of control, meaning that they might want to push the standard deviation of distribution of the product around a price that is probably lower than this standard deviation to further widen the base of what the product could be bought at. So that was a very long-winded way to say that probabilistically we might be able to see lower prices, but maybe not immediately. Maybe because we don't know exactly what's going to happen. We're still in negative momentum territory. We still have a drop in an upward movement. We go back to the daily here. We still have a drop on upward movement in volume. If we remember yesterday when we were talking about when volume gets executed and whether or not how that gives confidence in somebody to continue moving forward with that price action, if there is diminishing volume on that price action, more than likely we might have a movement to the opposite direction. Probabilistically, it's not always going to happen. Okay, there could be a lot of things that affect the motion and direction of a price of a given product. Now, let's take a look real quick at what happened to the VIX. VIZ, that is not it. VIX, please. Thank you. That is the VIX. We had a drop in the VIX. Okay. A somewhat substantial drop. Somewhat substantial, but it was a little leggy on the bottom side. It doesn't really tell us a whole lot. But what we do know is that when we're moving in 2 times of higher turbulence, it is possible to have a down day and then later on have a very high up day. Okay, so it is possible to be moving back and forth between green and red. It is possible. It is possible, and for this thing to keep moving upward. If anything, this probably established a lower bound to an upward moving trend line. Possibly. We don't know that. Tomorrow, anything can happen. Considering what is happening right now in terms of the stock, this could be moving further down, and we may have to pie this to some extent to where this isn't maybe the best line to make yet. There's not enough information to establish a trend line. Now, let's take a look at the bonds. Something happened in the bonds today. It was kind of interesting. I thought, I'm almost positive Mr. Van Meter will talk about what happened in the bond market today. Now, what we're seeing here, okay, is a very tight movement of price action around this level of interest, of yields and price for bonds, right? What we want is for bonds to go up. Okay, how much higher can it go? Well, it went up as high as this amount. But what does this tell us generally about the current price of bonds, and what it should tell us about the current amount of money floating around in the system right now? What it tells us is that there is relatively little amount of money floating around in the system. So what is the money currently floating right now in the system? That's the thing that I don't exactly know, because a good chunk of it probably got eaten up by gold. A good chunk of it probably got eaten up by Bitcoin. And because maybe those two assets have recently gone down, that may be what is quote unquote fueling the today's rise. It may not be that it is going to be continue to fuel it to new highs, because I don't think that's the case either. For us to see new highs also, we have to also be in a place where new highs were executed. So we have to probably be below this point here and or this point here to be able to see the type of expansion to the upside that the tech market has been kind of famous for a good little bit now. Anyway, so that's pretty much everything. We did have a drop today, but it's kind of almost indecisive. All right, it's kind of almost indecisive because it went up, it went down, but it kind of ended up settling somewhere in the middle. Okay, so it's a little bit indecisive in terms of where it wants to go, even though in terms of bond sales, 20% did go to the dealers. That's something that I heard Santelli talking about today. There's something super interesting, and I cannot wait to hear what Steven Van Meter has to say about it. Anyway, so that's the extent of the things that I know today. Tomorrow we should see jobs numbers, so keep that in mind early in the morning. This probably something is going to happen with jobs numbers. And until next time, keep safe, keep healthy, stay happy as much as you can, stay sane. Until next time, take care. Bye now.